Hello everyone, and thank you for joining us this Saturday morning to this educational presentation of trading with the PTS Primo charting platform. And I'm going to take you through a step-by-step process so that you can see how simple and how easy it is to become a consistent trader. And this is part one in a series. We will continue the series next week by going a little bit more deeper and a little bit more advanced into how to use our platform. But the reason why our platform was created, the reason why I teamed up with Pro Trader Strategies, is to really educate you. And a lot of people say, well, why do I have to be educated? Why can't I just buy some signal service, or why can't I just mock and do whatever some trader is doing in their chat room or someone on TV, what they tell me to do? And I'll share with you these statistics to show you why this was created. Because first of all, the facts are 80% of all traders will lose money. All right, these are the facts. Now, when I say 80% will lose money, I don't mean that you'll go into some type of slump and you'll have a drawdown. It literally means that you'll lose all of your nest egg. Everything you've put aside for trading will be lost. The facts also state that 15% of all traders will just break even. And that's really not a bad feat in today's markets. You know, to break even, you really still have to do a lot of work. But after a lot of hard work and a lot of studying, a lot of, hard-earned money that you put into the markets, you're just really going to be treading water. You're going to be breaking even. So ultimately, this means that only 5% of all traders are consistently profitable. So we have roughly about 100 people today in today's audience. That means basically that only 5 of you, only 5 out of the 100 people listening will be consistently profitable. And if you want to see what that looks like on a pie chart, as we see here, this large portion in red, well, that is basically saying how much people will be losing. This is 80% of all traders. This section here in blue represents the amount of traders that will break even, and this small green sliver here is a representation of the traders who will ultimately be profitable. So you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? You know, I've been trading long enough where when I started out, I had different feelings and different concepts about what the markets were and how you could make money. I felt that it was a zero-sum type of, venture, that for every time I won, somebody lost. But, I really feel strongly now that the markets are like a vast ocean. It's just, never-ending supply of profits. And all it wants you to do is just take as much as you want out of it. But if it's as simple as that, then how is it that just a small amount of traders are able to do that on a consistent basis? Well, after a lot of studying and a lot of research myself, it really is rather simple. The reason why these traders are able to become consistently profitable is that they are consistently on the right side of the market. You see, think about it. When you're losing, it's basically you're doing the opposite of what the market wants to do. You're not on the same side of the market. Let's say you buy something and it goes straight down. Well, you're out of sync with the market. Or you sell something and it goes straight up. The traders who are consistent are the ones who are in sync with the market. So I'm going to show you today how simple it is to be in sync with the overall trend. And that will greatly increase your odds to being a consistent trader. And you'll see how simple it is by applying our PTS Primo charting platform. That's the reason why we're going to share with you this particular presentation in a step-by-step process today. Because we strongly feel that this is the platform that teaches traders how to listen to the market. If the market is telling you it wants to go up, then you can be on the right side of the market and be only a buyer. If it's telling you that it wants to go down, if you learn how to listen to it, well then it's telling you that either be on the sidelines or to be a seller. That's how you become a consistent trader and join that 5 percentile group, by being in sync with the market. And the PTS Primo charting platform was specifically designed to do that. So this promises to be a great presentation. Once again, thank you for joining us this Saturday morning. My name is Steven Primo. I am the president and founder of Specialist Trading. And I teamed up with Pro Trader Strategies, where we actually developed the platform with the goal in mind to teach you how to trade with the simplicity of all the things I've accumulated in my 41 years of trading. I started trading some 4 decades ago on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist, so that's where we get the name Specialist Trading. A specialist doesn't mean that you're any more special than anyone. It just means that you specialized in making markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell IBM or Waste Management or US Air, these were stocks that I made markets in. You had to go up to my booth, and I made a market for you where I would buy and where I would sell that particular equity from you. Okay. Now I did this. I was a specialist during the crash of 1987 and the bull market that followed. I've traded just about every market environment you can think of. Sideways markets, straight down markets, straight up markets, quiet markets. I've traded just about every system and every strategy you can think of. Elliott wave, support and resistance, volume, anything you can think of. So in my 41 years of experience of trading, I know what works in terms of consistency and I know what doesn't. So we're here so that we can shorten your learning curve so that you don't have to waste your time and most especially hard-earned money, spending thousands and thousands of dollars on techniques and systems that really show no consistency in their trading. And that's why we designed the platform so you can actually do it yourself. So I'm going to take you through the step-by-step process after I explain exactly what we're going to be implementing today. But before we begin, as always, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using our platform and using the step-by-step process. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as always, please remember that all examples we're about to show you are strictly for educational purposes only. As you're taking a brief moment to view our disclaimer, once again, I'd like to invite each and every one of you to follow us on Twitter. If you haven't done so already, there's our handle right there. You may want to copy it down. I post different information every day, anywhere from signals that our strategies are generating to little bits of financial wisdom along the way. So lots of great free information. Feel free to follow us on Twitter. Now, as I stated in the very beginning sentence, we are an educational company. This is an educational presentation. We're a little bit different from other webinars and other companies you may have attended or other platforms you may have seen, because our only goal is to teach you. All right, we're not here to force feed you signals. Even though our strategies generate signals, we want you to learn what your strategy signal is based on so that you can ultimately decide where you want to enter based off that signal, where you want to exit, where you want to place your stop. You see, we want to put you in charge. That's why most people fail, is because you're taking yourself out of the game. You're basically telling the markets, I don't know what to do, so I'm going to rely on this $10,000 system I bought. Or I don't know what to do, I'm going to rely on what people say in a chat room or a trading room. Or I don't know what to do, so I'm going to listen to TV and listen to what the earnings are and listen to what these guys are telling me. But you're taking yourself out of the game. That would be similar to an airline pilot saying, I don't know how to land this thing. I'm going to let you land it for me. All right? You have to know, from the very beginning of the setup, where you're going to be buying, where you're going to be selling, and you have to know why you're going to be doing that. And likely, you have to know whether you want to take that trade or not. You do not have to take a trade if you don't want to. So we don't teach, nor do we trade systems where everything is supposed to be traded like a robot, where everything has to be done the exact same way every time, and you have to take the trade regardless of conditions. All we provide is sound fundamental education. As you see here, our goal is to teach you how to trade, not to trade for you, because a good mentor teaches you, but he does not trade for you. He gives you the information so that ultimately you can make your own decisions. This, in my 4 decades of trading, is the only way I've discovered how one becomes a consistent trader, by making your own trading decisions, not by having someone or something else make them for you. So the only way you can get to that point to make your trading decisions is to be supplied with sound fundamental education that has stood the test of time, and that's what we provide. We provide you with all the education and the mentoring, step-by-step processes to put you in charge of your own trading, okay? Now, since this is going to be a great presentation today, a lot of information I want to share with you, I please ask that you wait till the very end to ask questions. Once again, we're a little bit different from other presentations you may have attended in the past, and the fact that if we stop for every slide, we may be here for a good 2 hours. I don't want to take all of your Saturday morning away. So if you have a question, please wait till the end. There is a little box I have to open up to even see your questions, and I won't even open that up till the end of class today in about a half an hour. So if you have a question, just wait, and then we'll get to them in the next half hour or so, okay? And the one question I will answer is the most common and popular one, and that is this being recorded? Yes, it is. We record all of our webinars, so if you have to leave early or if you can't see the screen or hear my voice don't worry, we will provide each and every one of you with a link to this recording, okay? So we have a good crowd here today. If you joined us late, please wait till the end to ask questions. Okay, with that said, let's begin. Now, what if there were a tool that was automatically designed to put you on the right side of the market? Remember, that's why most people fail. That's why most traders join that 80 percentile of failing, of losing all their money, because they're out of sync with what the market wants to do. I mean, you can't make money if you buy and the market goes down. And you can't be consistent if you sell and the market goes up. What you're really doing is you're doing the opposite of what the market wants to do. So what if there were a tool that could automatically put you on the right side of the market? Well, don't worry, there is. It's called the buy-sell line. This is one of the first things that was taught to me by my mentors when they saw how much I was struggling some 41 years ago on the floor of the stock exchange. And you can't believe how simple it is, because you all have the capability to use it right now. In fact, you all have it. It's not some indicator you have to purchase. It's not some tease that we're saying, well, we'll give it to you for $5,000 and you'll be on the right side of the market. No, this is for free. All it is the 50-period simple moving average. You can start using this right away regardless of what type of trader you are. But in order to use it properly, this is what you have to do. You have to plot the 50-period moving average on your chart and then ask yourself this question. But you must ask yourself, where is price in relation to the buy-sell line? The buy-sell line is the 50-period moving average. In fact, I would suggest that you write that question down on a little Post-it and post it on your screen, on your computer screen. And I'll repeat that again. Always ask yourself before you pull the trigger, where is price in relation to the buy-sell line? Because once you ask yourself that, you'll only come up with two possible scenarios. Because if price is above, well, then that means you should only be looking to buy. In other words, you should only have a buyer's bias. You should never even consider selling if the price is above the 50-period moving average. Okay? And if price is below, then you will only be looking to sell. In other words, you will have a seller's point of view. Now, here's where most students fail, especially beginning students, because they say, oh, wow, this is simple enough. So once price closes above the 50-period moving average, I buy at the market then, right? Or once price closes below, I sell at the market. No, this is not a strategy. This is not a trading method. This is simply a tool that is designed to get you on the right side. This is the first thing you need to know. So let's say you go to a chat room and everyone loves this XYZ stock. And you say, okay, well, wow, normally I would buy it, but I'm going to try that thing that Steve Primo talked about. So you go to the chart, you plot a 50-period moving average, and you see that the price is below the 50-period moving average. My suggestion is don't touch that with a 10-foot pole. Why? Because the market is telling you, remember, we have to learn to listen to the market, and the market is telling you that the overall trend is down. And if you want to have consistency on your side, you want to put the odds in your favor, and you want to be in sync with the market. And if the market is telling you that it wants to go lower, then why would you be a buyer? You will only be a buyer, have a buyer's bias if price is above. If price is below, you'll have a seller's bias. But remember, this is just telling you what side of the market to be on. It's not telling you when to buy. It's not telling you when to sell. There is no structure involved yet. We still have to add structure. But the first thing is the most important, and that is to be on the right side of the market. Now, this tool can be applied to any market, any time frame, in any direction. I'll say that again because this is where students have a problem. They think, well, Steve, I only trade the futures, or Steve, I only trade intraday. So how does this work? This can be applied to any market, any time frame, and any direction. It does not matter if you're trading tick charts. It does not matter if you only look at monthly bars. It does not matter if you trade Bitcoin or commodities. It does not matter if you trade the euro dollar. Whatever chart that you're looking at, you should have a 50-period moving average applied. Okay, that's it. That's how simple this process is. All right, so let's look at this chart here. This is a weekly chart of the spiders coming into the end of April. Someone looking back in hindsight said, well, boy, I missed this entire run-up here. This is a weekly chart. I'm a swing trader, and looking back like 2 years, I wish I would have known at least that this market had a positive bias to it. Well, if you had simply added the buy-sell line, you would have said, well, boy, we knew in advance that it wanted to go up. It's going back as early as June of 2016, a couple of years ago, we were above the buy-sell line. And so the market was telling you it wants to go higher until we have consecutive closes below. This is a buyer's perspective market on a weekly time frame. It works the same way to the downside, all right? If we look at a weekly chart of GE, all right, looking back in hindsight, let's say this was in your long-term portfolio, and you say, boy, I've lost so much money on this. I wish I would have known it was going to be going down. I wish I would have known this in advance. I could have gotten out. Well, actually, you did know. If you had just applied the 50-period moving average, you would have known as early as February 2017, we had consecutive closes below the 50-period moving average. You would have saved yourself a lot of money and a lot of sleepless nights holding on to this. So you see how it's in your best interest to be in sync with the market as trying to fight it. But for some reason, we've always been taught, hey, if something's oversold, you got to buy it. Well, look how long we've been oversold in this, okay? How much longer could you keep buying this, okay? So as you can see, the market is always telling you what it wants to do. It's just that we never have been taught to listen to it. We've always been taught to listen to some guy in a chat room, listen to some master trader and spend $10,000, $20,000 on his courses would tell you how to trade, listen to some guy on TV, listen to the earnings. We're never listening to the chart in front of us. And that's where all the answer comes from, because that's the source of what we're trading. So learn how to listen to the market. That's why we created the platform, so you could teach you how to listen to the market. All right, now here's an example, an older example of CREE. Now, someone looking at this would say, well, no clear-cut direction. I don't really know what this market is doing. Well, if you applied the 50-period moving average, actually, starting here, we were actually below the 50, so we had a seller's bias, all right? It doesn't mean you're going to sell at the market. It means you have to look for sell signals only, regardless of what method you use, okay? Now, sure, this was fine here. We had a sharp sell-up, but now we start to get to this point where we're oscillating above and below. It's kind of tricky here. We're hugging the 50 period. Now we're above it. So here's the rule of thumb. If you want to be on the safe side, look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established, all right? Because sometimes you'll see one close above and then it'll go right back down below, or one close below and it'll go right back above. So look for at least 3 to 5 bars to close to tell you what the overall trend is. So looking back at that chart, we see here that, well, we're closing below. Even though we're hugging it, we're closing below. But what do we have here? Well, we have 1, 2, 3, 4, 5 closes above. Now, someone looking at that would say, well, Steve, how is that enough for me to know to have a buyer's bias? Well, remember, that's the rule of thumb. This is not a system. It's not back tested. It's just something we've been using for 40 years that has high levels of consistency. And if you see here, wouldn't you have liked to have known well in advance that you should be looking at this from a buyer's perspective? All right, let's look at UA. Obviously, in hindsight, you should never have bought this, but this is the way most traders trade. They see a little bounce and they go, okay, that's the bottom. That chat room I go to says to buy this stock, so you buy it, and then it makes a lower low. You have another bounce, and you go, okay, well, I'll buy some more. Makes a lower low, all right? So you probably exit everything. Now it starts to really rally, so you go, boy, I just got out too early, so I'll get back in. Makes lower lows, and so on. This is the way markets trade. They have the stair-step approach, either straight up or a stair-step, all right? Most of the time, it's a stair-step approach. Someone looking at this would say, boy, how many times did we make a bottom and then make a lower bottom? I mean, I wish I would have known not to buy this. Well, you actually would have known not to buy it. Way up here in advance, we had consecutive closes below, well before we started to go. And even every time we had a bounce, that should have been looked at from a seller's point of view, not from a buyer's point of view. Because even though we're bouncing here, we had a nice bounce, we're still below the 50. And the odds are that bounce is not going to last, as you could see. Now here's a perfect example where you have one close above. This is not enough to tell you that the overall trend is up if you're trying to be conservative, because many times you'll close right back down below and go lower. Now, an example here in MRK, as you can see, well, we had 5 closes above, and this worked out pretty well. So let's say your buy signal was somewhere around here, but it never worked out, okay? When we say that this is not a system, that this is just a consistent way to get you in sync with the overall trend, it means that every once in a while, it's not going to work, because that's just the way markets are. That's just the way life is. Nothing works 100% of the time. So had you used this tool right here to say, well, I'm a buyer, and then your strategy generates a buy signal, most likely you would have lost money, all right? Because it went right back down, and now it's started to oscillate above and below. As we see here, we start to have consecutive closes below. In fact, we had a total of 9 closes below. So if you hadn't exited your buy here, it would have been a good idea to get out for sure at these levels. Why? Because the market's telling you it wants to go lower. You have 9 consecutive closes below the 50-period moving average, and nothing yet has happened yet. So had you gone out, you would have saved yourself a lot of sleepless nights because the market quickly fell out of bed. In fact, it fell 8 points in the following week. Now, I know a lot of you are saying, well, this is just too simple. I don't have to pay for anything. I don't have to have some convoluted indicator that I have to upload onto my computer. It's just right there on my charts. I just put the 50-period moving average. Well, let me show you what my mentors taught me. All right, here's a chart of the Dow Jones Industrial Average, okay? The only problem is this is October 1987, all right? So we had the 50-period moving average, and coming into that time, we were well above the 50 and everything looked fine, but now we start to oscillate below and above, below and above. What is the market telling us? It's telling us that there's some indecision and that at the very least, this is a red flag that you should take care. If you're long, you may want to move your stop up or you may want to sell a portion of your position. Or if you're thinking about getting into the market, I would back off because the market is closing above and then below. We have 3 consecutive closes below. It closes above, and then we have about 8 or 9 below. It closes back above, and then we have about 3 below. So this is a major red flag telling you that big changes are coming, all right? And they're indecision. They may not be down, they may be up, but until the market decides what it wants to do, at the very least, you should be on the sidelines. And that would have been a good thing to do in 1987 because the crash of 87 would have been comparable to a one-day market drop of 4,000 points today. Imagine the market being down 4,000 points in one day. Well, that's what happened on this day right here. That's just this day. We're not even accounting for the 2 or 3 weeks prior to that. All right, let's look at another chart. This is a weekly chart of the spiders, okay? All right, looks familiar. The only trouble is this is January of 2008. 10 years ago. Once again, we're well above the 50-period moving average on a weekly basis, but now we start having some warnings here. We have 3 or 4 closes below, and then we close back above for 1 or 2, and then we have multiple closes below. So once again, the market is giving us an early warning saying, listen, I'm in some indecision point here. If you're long, it doesn't mean that we're going to crash. It doesn't mean we're going straight down, and it doesn't mean we're going straight up either. So you may want to protect yourself, move your stop, or exit a portion of your shares, or if you're thinking about going long, just hold off a bit. And that would have been the best bit of advice because we all know what happened after that. That was the beginning of the 2008 financial crisis, all right? So I want to give you an assignment here. Since we are an educational company, you are going to be getting homework, all right? I want you to go back and research your last 10 to 20 trades. I can almost guarantee you that your losses were due to the fact that you were out of sync with the buy-sell line, okay? So go back and look at your last 10 to 20 trades. Remember, this is not a system. Don't think that just because price closes above that you buy at the market, or if it closes below, you sell at the market. This is just a guideline telling you what your bias should be. Once you know the correct bias, then you can apply any strategy, any technique to that bias, okay? So this is just similar to, let's say you are camping in the woods and you want to take a nice leisurely, rafting trip down the river, all right? The first thing you have to do is decide the condition of the river, all right? Which direction is it going? Is it going in the direction you want to go, or is it going way far the opposite direction? Once you decide that what that direction is, if it's in liking with where you want to go, then you have to have some structure in the form of a raft, in the form of an inner tube, in the form of a boat. It's up to you. That's the same thing with the market. You have to find out which direction it wants to go first, like the current of the river. Once you find out which direction, then you have to add some structure, like a raft. The structure is the strategy. The structure is the technique, okay? We're only talking about finding out which direction the market wants to go at this point. Now remember, it does not matter what type of trader you are. If you say, well, Steve, I only trade tick charts of the E-mini S&P. Well, so do I. And I add a 50-period moving average to tick charts. what a lot of students feel they must do, and there's no requirement, and you're free to do this, but there's no requirement. They say, well, Steve, I've always been taught you look at the higher time frame to define what the lower time frame is going to do. And that's fine. If you're asked me personally if that works, I, in my 41 years of trading, have personally found no consistency in that type of trading. So if you want to use that, go ahead, but that is not required. All we're saying is that if you trade tick charts, then add a 50-period moving average to the tick chart, because that's the bar time frame you're going to be trading. You don't need to look at an hourly chart. You don't need to look at a daily chart. It's not required. If you want to, you can. But the only thing I've seen that technique serve me is to keep me out of a lot of good trades while I'm waiting for the two to line up. And then by the time they line up, I missed a really good setup. So I personally do not use that technique. If you want to, you can. Now, let's take it up a notch. Let's talk about our fluid feature. This is part of the process where we're going to be teaching you today of how you can make trading so much more consistent. The beauty of the fluid buy-sell line is that it not only tells you the overall direction of the market, like the 50-period moving average, but it also tells you the momentum. So what is the fluid buy-sell line? Well, we look at a chart here of GE. This is that daily chart of GE we looked at earlier. We click on the buy-sell line in our platform. All right, we make everything so easy because it's all just one click away. Once you click on buy-sell line in the upper green strategy tab, you'll get a drop-down menu. All right, and if you're applying the 50-period moving average, you simply click that on the 50-period moving average, and that will have it there for you. But we found a way that really makes it a lot easier. We have 4 total different features. Here's our new feature, the fluid feature. Once you click that on, it will automatically color the screen. All right, you have a reddish orange and a blue background. Now the reddish orange is the sell zone, and we use that old sailor's adage, red sky at morning, trader take warning, meaning that you don't want to be buying if price is in the red zone. The blue zone is telling you that blue sky at night, trader's delight. That's where you want to be buying. Okay, and we also at the same time are looking at the slope of the buy-sell line, because if you have a strong downward slope, that's strong momentum to the downside, and that's what you want to see. That's the river showing a lot of movement. That's a lot of current in the river, and that's what you're looking for. Now it'll work the same way to the upside. In HPQ, we apply the fluid, and we see the buy zone and the sell zone. Blue sky at night, trader's delight, so that's where you want to be taking your buy setups. Red sky at morning, traders take warning, that's where you want to be looking for sell setups. And it's easy. There's nothing you have to do because it's automatically pre-programmed in our platform. This is our most popular, as well as, I would say, powerful way to apply the 50-period moving average on our PTS Primo charting platform today. Let's look at that weekly chart of the spiders, all right? Now, we had shown you what it would look like with the 50-period moving average, but what if we applied the buy-sell line and the fluid, okay? We click that on, and automatically it will change the color. So now it's a lot easier to see. It's not so nebulous. We see that there's a lot of pricing going on here below. And right there is the red flag in the market on the spiders in 2008. So it could have saved you a lot of heartache in the beginning of that 2-year bear market we experienced about 10 years ago. All right, so let's begin the step-by-step process. I'm going to go to a live chart of our platform, and I'm actually going to have an interactive portion of this where I'm going to ask you to look at anything that you're interested in. But I want to show you the step-by-step process, okay? Step 1, obviously, choose the market you're interested in trading. Now this, seems kind of silly. Obviously, you have to choose the market, but I only say this because our platform offers a wide array of different markets to look at. We have different data sources. We're going to just focus on stocks today, but you can look at currency pairs. You can look at the E-mini intraday trading. You can look at Bitcoin. There's so many markets. You can look at ETFs. So you choose whatever you're interested in. That means whatever time frame. If you're a swing trader, you look at weekly charts or even monthly charts if you're an investor. If you're an intraday trader, you can look at 1-minute charts. It's up to you, but choose whatever you're interested in. So that means plot the chart, and this is what it'll look like on our platform. Here's an example of NTAP, okay? Now, second thing, step number 2, is we want to click on the buy-sell line in the upper green strategy tab. This is part 2 of the process that you will be doing on a daily basis, okay? Click on buy-sell line right here, and the drop-down menu appears. Click on fluid. and right there, it'll automatically change it for you. So there's nothing you have to do to figure out, okay, now let me look at the earnings to see what the projection is here, what this stock wants to do, or let me look at the higher 2 time frames to find out what it wants to do. There's none of that. Remember, trading is simple. We just make it more complicated than it has to be. And we specifically designed this to make it as simple as possible for you. All this process takes about less than 10 seconds to do on a daily basis. All right. And then we go to step 3, which is apply the structure, a trading strategy, a trading technique. Now, this can be one of yours. It can be someone else's. I don't care if it's someone else's technique, but you'll most likely improve your odds for consistency by applying it with our fluid buy-sell line. Or it can be one of ours. All right. So here's what we're going to do now. Now you know the process. We're going to show you how simple it is. But before we do, I have to give you our disclaimer because we're going to show you these actual charts that finished up to yesterday. So please remember, I'm going to show you a lot of performance results using our PTS Primo charting platform with these stock charts. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as always, all the examples I'm about to share with you are strictly for educational purposes only. So if you give me a second, I'm going to toggle over onto our charts. Now here are our live charts, okay? And we have a chart of Facebook, okay? This is Facebook coming into yesterday. And we're just going to go back starting at May. As you can see, we started back at May. Now let's say you're interested in seeing what Facebook's going to do, okay? Let's say you have a tip, or let's say you've been interested in the stock. And so at the end of the day, you come up and you punch up the chart. All right, this is the step 1. You punch up the chart, whatever you're interested in, a daily chart of Facebook. Step number 2. We go to the buy-sell line, drop-down menu, we click on Fluid. Automatically, it changes. So we've known since the beginning of May that the stock has been in the buy zone. So even when we had this top here and we started to come down for a week or so, there was no reason to sell anything, or no reason to say, well, it's time to get out of our position or sell short because we're still in the buy zone. Now, sure, you can sell wherever you want to take a profit, but we mean to sell to look for the stock to go lower. Now, even right here, we topped out this earlier this week and we're starting to come lower. Should someone be shorting this stock? No. Now, we're not saying that this is something, that is, obviously going to go higher, that it's, just so easy and there's predicted that it should go higher. We don't know. But we should only be looking at this from a buyer's perspective. All right, so now we have to add some structure. Step 3. Now, we can do that in adding 3 of our best strategies. The first one is strategy number 4. All you have to do is click on, in our green strategy, strategy 4, click on signal arrows, and the arrows automatically appear. Now here's the funny thing. We had 2 nice signals right here to go along. They worked out very nicely. Guess what happened on the close on Friday? Strategy 4 has generated a buy signal in Facebook. Now, does this mean that this is going to go up higher? No, it doesn't. In fact, let me share with you a little secret. With most of our strategies, one of our suggestions is to only buy once you get a strategy, only buy once a strategy signal, only buy once price trades 1 or 2 ticks above. So just because we have a buy signal, it does not mean that it's going to be going higher on Monday. So if we go higher than the high of this green arrow here, well then yes, then we'll buy. So we need confirmation that it goes above. So that's a little secret that I've shared with you. Now, let me give you another secret that I share with you. This is the way I like to trade. I have seen that many times, not guaranteed and not statistically proven, but remember, we're not a statistical company. We are an educational company, and I'm passing on things from my 41 years of experience in the market. That many times the best bang for your buck are the signals that are generated closest to the buy-sell line. All right? So because oftentimes you'll see price come down in the vicinity and then bounce back up. So these are strategy number 4 setups. All right. If I'm only going to be using that technique where I want to take setups that are close to the buy-sell line, I would probably not have taken these setups. So I would look for the next strategy, strategy 5, which is based on entirely different parameters. Click on the signal arrows and, well, guess what? May 1st and May 4th, 2 signals very close to the buy-sell line. And you see what I mean by the best bang for your buck? Look how much more they moved up. Now, sure, you could have always taken these signals as well, but in my opinion, I personally, no guarantee, there's no statistics to prove this, but I like to take the signals that are closest to or touching the buy-sell line. So I personally would have taken these 2 signals in Facebook, which were May 1st, just about a month ago. All right, that was strategy number 5. Let's go to strategy number 8, the third in our most popular as well as consistent methods. Click on signal arrows, and as you can see, because it's based on entirely different parameters, there were no signals generated. So had I gone through that process, the only signals I personally would have taken were the strategy 5 setups, okay? See how simple this is. Now, remember, we are not a signal service. We're not here to say, listen, all you have to do is just blindly take the up and down arrows to know what to do. We don't believe in that. Once you become a member of our courses, you learn through online courses and through mentoring what the signals are based off of. We don't believe in people just blindly taking signals. We want you to understand and to fully be a part of the process. So it makes no sense, and it doesn't help anyone to blindly take signals, because then we've just joined the rankings of people that just blindly go to a chat room or blindly pay for a signal service or blindly listen to someone and what they want to do on TV. That's a recipe for disaster, and the main reason why most traders fail in that 80 percentile group. You have to be a part of the process. That's why we're an educational company. So we provide you these signals to educate you. Ultimately, once you learn how to spot them on your own, which we teach you in the course, you really don't need the arrows. Okay, so that is, I'm going to go down a list here. That is Facebook. All right, let's go down what they call the FANG stocks. That's Facebook, Amazon, Netflix, and Google. Okay, so let's go down the second one here, which would be Amazon, AMZN. Okay, we simply click that on, hit apply, and remember, we're only going to be looking at the last month or so. And obviously, this has been in the buy zone since the beginning of May. So there's no reason we'd ever think of selling this. All right, so now we know that we're buyers. All right, we would have known this at the beginning of May. Let's check out the strategies. Strategy 4, click on the signal arrows, and we had some very nice buy signals right here. Now, I personally, if I were trading this with options, I know it's a $1,600 stock, and a lot of people don't trade this, but if I were buying calls, I would not have taken these because I like to get them a little closer to here. So that's my own personal reference. So I would not have taken these 4 signals, even though they were all profitable. Let's go to strategy number 5. And as we see here, here was another one. Once again, there are no signals close because we never got that close. And then let's see if strategy 8 generated any. And yes, strategy 8 generated what we call a cluster. When you see 2 to 3 very close signals in a row that where the market has not done anything, that's a high probability setup because the market is like coiling. It's clustering, getting ready to break out. And a week after these first signals were generated, look what the market did. So even though I know it's an expensive stock, I personally would not have taken any of these signals because we didn't get low enough to my liking, which is touching or close to the buy-sell line. But you see how simple this process is. And remember, in the courses, we teach you how a strategy is generated. It's not something where you just want to click on the arrows. You're clicking on the arrows just to check your work. All right, so that's A in the FANG stocks. Let's go to N then. That would be Netflix, NFLX. Simply hit apply. Going back now to the beginning of May, we see here that, well, this has been in the buy zone as well. Let's start up with strategy 4, the signal arrows. And yes, I would have most likely taken these 2 on the 3rd and the 4th. You see how they're right there touching and then how we went higher. So that would have been a very nice setup. Let's go to strategy number 5. And yes, there was one right here. So you had a double confirmation. 4 and 5 both generated buys on the 4th. And it had another one right here. Finally, let's go to strategy number 8. And it was on this day, but not low enough. So I would have most likely taken this signal on the 4th because it had 2 of our most popular and consistent strategies generating buy signals on the same day. And look what happened after that, okay? All right, let's go to the last in the series of the FANG stocks would be G. That would be Google. We simply hit apply after we type it in, and this is a little bit different. We see in the beginning of this, we were below the buy-sell line, okay? And then coming into the first or second week of May, we started to rise above it, and then we've stayed above it the entire time. You see what we mean? How when price starts to sell off, this is where people will think, wow, we gapped down lower, we closed lower. This is a major sell signal. We're going to go all the way lower. But look what happened. We never went into the dark zone. We never went into the sell zone, so why should you sell this? Sure, it would have been tough holding on for these 2 weeks, but remember, we haven't added any structure yet. We're looking to buy here because we're in the blue zone. But most likely, if we went to a signal service or a chat room, they would say, oh, this is a clear-cut sell signal. You had a hanging man right here, candlestick pattern, all right? You have an opening and closing in the bottom half of its range. This is a clear-cut sign that we're going lower. Well, yes, we did go lower, but as we were going lower, what we teach you is that these are buying opportunities. These are not selling opportunities. They're actually buying opportunities. So let's see if any of our strategies could have generated a buying opportunity there. We click on strategy 4, and we see that, well, yes, there was a buying opportunity. So rather than go short here, we would have most likely taken this long signal on the 30th of May, just a week or so ago. And that was a nice signal. Look what happened after that. That's strategy number 4. Let's go on to strategy number 5 and see if there were any signals generated. Nope. Strategy 5, which is based off entirely different parameters, didn't generate a signal for the entire month of May and coming into June. So nothing to take there. Let's see if strategy 8 generated anything. Yes, well, strategy 8 generated a sell signal, first of all, in May, beginning of May. This is why I say I only like to take the signals that are closest to or touching the buy-sell line, because we were too far away, and I most likely would not have taken that, and that most likely would have resulted in a loss. Now, we have 2 signals that were generated later using strategy 8, but not enough for my liking. They both would have ultimately been profitable. Remember, you would have entered once you traded above, so you would have drawn a line above here and another one above here. So you would have had profitable trades in both of them, but I would have liked them to be a little bit closer. So the only signal I would have personally taken was that one in the strategy 4 setup down here. Now, let's just look at an ETF to see what the spiders are, or it's actually the QQQs, okay? Let's look at the QQQs going into this past week. As we see here, in May, we were below, so this is where we're looking at the market on the ETF for the NASDAQ as a selling prospect. But once we crossed above 3 to 5 above here, in the second week of May, we are buyers in the QQQs. That's basically telling us that the market is going higher in the NASDAQ. You see, because if the ETF, which is the stock version of the NASDAQ index, says it wants to go higher, well, then normally that would mean that the NASDAQ wants to go higher. So that's giving you a great clue. If we add strategy number 4, we see here that we had a buy signal right here. Well, this is a great signal. Now, this is most likely a little sell setup that we maybe might have taken, and this is what we mean by consistency. If we had taken this, we had lost on the trade, but we could have recouped everything and made more going long the next one. That's strategy number 4. Let's look at strategy number 5. 2 great buy signals right here about 3 weeks ago, but not close enough to the buy-sell line for my liking, so I wouldn't have taken those. And let's see if strategy 8 generated anything. Strategy 8 generated a nice signal right here, but still not close enough for me. So I probably only would have taken the strategy 4 setup, going back in hindsight, right here. I would have recouped my loss and gone back in and made the money back. Okay? Now I'm going to do something. We have about 5 or 10 minutes left. I'm going to ask you if you'd like to look at anything. I'll open up the question and answer box and see if you want me to look at any of your stocks. We do this very rarely. Usually we don't do this because we're trying to teach you a lesson. But today I'm just trying to show you the step-by-step process. So I see a couple of people have already written things here. Is Apple? Yes, let's show you Apple, okay? Let me just close this and we'll... and these are daily charts we're looking at. Okay, so here's a daily chart of Apple, and this is coming in. This is beginning of May, coming in. As you can see, once again, we crossed over. Let's see if strategy 4 generated anything. Oh, yes, a nice setup here. As the market was going sideways, strategy 4 was generating buy signals, 3 of them, and guess what? It also generated a buy signal yesterday. Now, once again, what we always teach our students is to use our confirmation method when beginning, meaning that just because there's a buy signal generated, I would suggest and require more that you have more experience, a big enough capital size. If you want to buy at the market or place a limit on the close, that's fine. But for beginning students, we always tell them to draw a line 1 or 2 ticks above. It's up to you, and wait for price to cross above. That's your entry point. All right. Same way here, you would have bought above, even though you would have purchased on the opening higher. You still may have made some money to the upside, maybe 5 points. And the same thing here. You would have purchased above 1 or 2 ticks, 1 or 2 ticks. That's what we teach our beginning students. Now, some people were asking about intraday. Let's see if we want to go on a 5-minute chart. Okay, see how we have different time frames? We can scroll down to a 5-minute chart. And this is just a 5-minute chart. I'll scroll back a little bit. Oops, we went a little bit back too far. Let me just go back here. I believe this is, oh, this is a 10-minute chart. I think I hit the wrong button. Let's just look at the 5-minute chart. Okay, there we go. This is a 5-minute chart, and this is pretty much most of the day. We gapped lower, and see how we were below the buy-sell line on June 8th. Now, once again, I would not have taken these signals because we were well below and we were too far away. But then once we started getting closer, we see here that we started getting buy signals above. Now, that's strategy number 4. Let's see if strategy 5 had generated anything closer. Yes. Now, these two signals were the best buy signals, as you can see right here on a 5-minute time frame. That's strategy number 5. And see if strategy 8 had generated anything. Nope, strategy 8 did not generate anything at all. So there was a nice buy setup on strategy number 5 on a 5-minute chart. Let's go to a 15-minute time frame, okay? Just to mix things up a little bit. As you can see, there's a 15-minute time frame. Strategy 4, okay? Now strategy, if we look at on a 15-minute time frame, strategy 4 has generated a sell signal. But remember, you would not go short unless you trade below because we're touching right here. We had a couple of nice signals right here where you could have made a few dollars, but not that much. Here was a better one right here this past week to go long on a 15-minute time frame. It had a nice run up. That's strategy 4. Strategy 5. Well, this one was all over the place because the market's going sideways. This is what we mean by whipsaw markets. Most likely you would have bought here, broken even, or made a little money to the downside. Here, you would have probably had a loss, and then nothing has been generated. If we go to strategy number 8, nothing has been generated at all, okay? So strategy 8 does not meet those parameters. Let's go back to daily charts, and we'll go back just looking at the month of May. Oh, we suddenly switched over to a 4-hour chart. There we go. Okay. Let me open up the question and answer box and see if anyone wants me to look at another stock. We have a few minutes left here. Tony's asking, how come you're not using strategies 1, 3, and 3A? Those are great strategies, but they don't produce a lot of signals, mainly because they're pullback strategies, and they're great, and they still do fantastic jobs. But we want to share with you the best of our best, and this is why we have these. Many times we'll give strategies 1 and 3A out as free strategies because they produce signals, but every once in a while you'll have to sit and wait for one for a while. Strategies 4, 5, and 8 generate the most signals, and so I don't want to go through a lot of charts where we're just seeing no signals generated at all. As you can see, the last couple of charts I went through, strategy 8 didn't generate anything. So we're just wanting to show you exactly how the structure is. If you want to, though, you can perfectly apply any of those to these methods. They would still work. Nothing changes. We're just, without going through the whole gamut of different stocks. A couple of people here are asking for CAT and DHI. Okay, we'll look at CAT first of all. It's Caterpillar Tractor. Okay, this is CAT, I believe, and if we go down the gamut here, we see there was a strategy 4 buy signal, but it just generated. Remember, once you went long, it would not have been until this day right here. So you would have been long this Caterpillar Tractor on a strategy 4, Caterpillar Tractor. Strategy 5, once again, did not generate anything. Oops, no. And strategy 8 would have generated 2 as well. So you have a couple of signals there. Most likely, I would not have taken any of these because they weren't close enough to the buy-sell line for my liking. Let's add DHI. And this has been below. So as you can see here, you had 3 closes below, and then look what happened. You had a large sell-off right there from roughly 43 all the way down to 39, okay? You could have saved yourself all that when seeing you had a number of closes below. And we've been below up until yesterday. Now, we had our first close above. So right now, from what I've taught you today in today's class, should you be looking at this from a buyer's perspective only? No. If you're a more aggressive trader, yes. And if you have more experience, you can. But we teach our beginning students you need at least 3 to 5 bars closing above. So let's just go through the gamut of buys and sells. Here was a sell that would have worked out a little bit. Most likely using our money management, you would have broken even. Here were a few buys that most likely you would have sold. and lost money, but then once you've gotten back in, you would have made the money back, okay? Now let's look at strategy 5 to see if there was anything there. And strategy 5, if you're a more aggressive trader, has generated a buy signal. Now, remember, this is for more advanced traders if they only need one bar to close above. For most beginning students, we wait for at least 3 to 5 bars to close above, and there was one sell signal here that was far away that we wouldn't have taken. Okay, I have time for just one more stock before we have to go to the closing. Let me just look and see your questions. And someone's asking about AMD. Okay, we'll look at AMD right now. Okay, the process is punch up your stock, all right? And as you punch up your stock, if you already have the buy-sell line and fluid feature already there, then there's nothing you need to do. All right, now this has been going back. Let's go back even further. This is going back from April, the end of April. That's when we started to have consecutive closes above. So when the price looked as if it was doing nothing, you knew that this should be looked upon from a buyer's point of view. There's no need to look back now and go, boy, how did I miss this? It was trading at roughly 11 and I didn't do anything. Well, you would have known if you were interested in this stock that it should only be looked at from a buyer's perspective. If we added strategy number 4, well, there was a sell signal generated right here that would have generated into a loss. Unfortunately, it generated a buy signal right here. So we would have had one loss with this. If we punch up strategy 5, well, guess what? If you had gone short strategy 4, you would have had a small loss on, and then covered and gone long using strategy 5 and made back everything and more. This is what we mean by consistency. All of our methods have a high level of consistency. If you trade our strategies, sure, you will have losses from time to time. There's nothing wrong with that. But you want to have a method that's able to recoup those losses as quickly as possible. That's what consistency means. And as you see here, you had a losing trade, and with strategy 5, you would have made it back. Okay? See if anything was generated strategy 8, and once again, strategy 8 didn't generate. Strategy 8 is a little bit more finely tuned. It's a great strategy, but many times it's finely tuned really to get you in sync with those large moving markets, okay? Okay, so we showed you the step-by-step process. We showed you how simple it is. Remember, if you are at the beginning of this process, all you would have to do is punch up your chart, go to the buy-sell line, click on fluid, and then click on whatever strategy you're interested in. And once again, it can be any strategy. One of mine, one of yours, another educator, it makes no difference. But if you're in the buy zone, the blue background, you should only be trading buy setups. If you're in the buy zone in the blue background, you should not be trading any sells. What would you have done if you went to a chat room and someone said, this is a really bad signal right here. It's a bad sign. Everything is overbought. You've got to sell everything. All right? Now, most students say, this is the way I was taught, Steve, because something had gone up so much, it was way overbought, and you got to sell it. Well, how well would that have done? You see how simple it is when you're in sync with the overall trend. Remember, most traders fail because they're out of sync. That 5 percentile is able to consistently make profits because they are in sync with the overall trend. And you see here how simple it is to do that. Now, one last thing I want to share with you before we go back to the presentation is we have instructional videos on our platform. So all you have to do is click on the video tutorial tab and you'll see all of these, anything using on the chart. So you never have to come to saying, okay, how do I do this again? Or I'm not sure how to apply this. We have a great tech support department plus all these individual videos to teach you how to trade, okay? Now let me go back to the presentation. And remember, everything we share with you was strictly for educational purposes only. Okay, as I leave you with one final bit of advice here and things that really turn your trading around. Remember, the market, not some guy on TV, not some guy in a chat room or a trading room, and not some $10,000 system, but the market is always telling you what it wants to do. So your job as a trader is simply to listen to it and then jump on board. In other words, find out which direction the river wants to go and then add some structure. That's it. That's all your job is. Your job is not to figure out the earnings. Your job is not to figure out where support and resistance is. Your job is not to figure out what the volume means. That's too complicated. I was taught to use those same things 41 years ago, and they did not help me at all. So why do you think they're about to change and work now? There's no consistency in those things because mainly they're too subjective. We want things that are cut and dry, like the buy-sell line. If price is above, you have a buyer's perspective. If price is below, you have a seller's perspective. It doesn't get any simpler than that. So let's recap. Remember, the buy-sell line should be applied on all your charts. It makes no difference what time frame you're trading, what market you're trading, what direction you're trading. The buy-sell line is simply the 50-period simple moving average. In order to trade it correctly, you always ask yourself, where is price in relation to the buy-sell line? The simplest, most powerful way I know of applying the buy-sell line is with the fluid feature that is only available on our new PTS Primo charting platform. Okay, so ask yourself as we close here, do you think this edge could have helped your trading this past year? I mean, forget about this past year. How about this past week? I most likely think it would have helped you tremendously. So we have a great offer for you today for attending and taking time out of your Saturday morning. We're going to offer you our platform. This is the educational portal that teaches you how to listen to the market. We're going to offer you 30 days for only $7, okay? We're not charging you $500 to get everything. We're not charging you even $200. We're offering this 30 days for $7, all right? Here's what's offered. You're going to get the enhanced buy-sell line. That's what we showed you with all the different features. I only share with you the fluid feature, but you also have the background feature as well as the ribbon feature as well, and you can see what those are on the platform. We're throwing in the top bottom 25%. This is a short-term trend identifying tool which takes into consideration where you closed, either in the top or bottom 25% of the bar, to show you the direction of the short term. We're also going to throw in the signal scanner. This is a great opportunity to find out what the market's going to be doing the next day in terms of their overall trend. For example, as we see here, once you click on the strategy scanner, for an example, this was strategy number 4, you get this drop-down window here. Click on Load Symbols. We provide you with a list of symbols of any market you're interested in, and they automatically appear, all right? Then you just click on Scan, and in a matter of seconds, you will have a list of either green or red horizontal bars. The green bars mean that's a buy signal for the next day. The red ones obviously mean a sell signal. Then all you have to do is double click on these green and red bars and the bars will appear. As you can see, here's the buy sell line and we have the background feature applied. And it's as simple as applying the signals to them. So you're going to get the signal scanner. We have over 90 of the most popular and best technical indicators included on the platform, but we realize not everyone is a technical trader. Some people like to listen to news, and that's fine. Remember, we're not here to tell you how to trade. We're only here to inform and educate you. So if you want to listen to fundamental news, it's not required, but guess what? We're offering you free Bloomberg TV. There's another media page. You simply click on the media icon in the top left, and the media page will appear next to your chart. And you can watch real Bloomberg, live Bloomberg TV as it's happening, and you get all the information you're interested in fundamentally. Okay? So that's included as well. And this all comes with personalized tech support. If you have any trouble loading a chart or getting the real-time TV on your screen, don't worry. We will be there to resolve the issue in a matter of moments. So this is the portal we believe that teaches you how to listen to the market, will increase your odds for consistency, and so that you won't have to be a part of that 80 percentile group anymore. You can finally join the 5%ers. 30 days for only $7, but this is for a limited time only, so here's how to take advantage of this. Contact Pro Trader Strategies. I developed the platform with them. You can contact them through email. I would suggest they're the two best things. If you have any more questions about the platform or about what's offered, or you want to purchase a strategy, you could call them directly. There are trading consultants manning the phones right now. You can call them at 310-598-6677. Or the simplest thing is simply to go to that link you see below. Now, that link is not a live link, but they've posted a live link in the chat box. So if you go to the GoToWebinar column in the far right, there's a chat box there. There's a live link that's been posted for you, and you can simply go to the sign-up page for that $7 offer, okay? $7, you can't beat that cheap of an offer for tons of information. It's taken me over 40 years to accumulate all this, and we put it in one package to make it simple for you. We specifically designed it to make it as easy as possible for you. So for $7, that is an amazing offer right there, okay? Now, let me just open up the question and answer box to see if there are more questions. People are asking a simple moving average or an exponential moving average. We always use a simple moving average, okay? Remember, this is not statistically proven or back-tested, but in my 41 years, the 50-period simple moving average works better than anything I've ever seen. So I would always use that, okay? Let's see. Thank you for your training. I love the way you explain everything. Much appreciated. You're welcome, Tony. I hope I do. Remember, I put a stress on making everything as simple as possible. And it's not only in the way I teach, but it's also in the way the platform is. You see, the platform is a direct result of how we want to teach you. Everything there is so simple. It's one click away. And it's personally a pet peeve of mine. I've traded just about every platform you can think of. And sometimes I'm lost trying to figure out how to load a chart or how to, get a scan. Well, we made everything so simple. It's a 1, 2, 3 step process, and it's there in a matter of seconds. So thank you. And the platform is just as simple. Gene is asking how much after the trial. Remember, you are not obligated to continue after the trial, but most of our students continue because they're so impressed with the knowledge and information. I believe it's less than 100. I think it's 97, and that's still tremendously inexpensive because most platforms that have this much information that provide this and strategies are anywhere from $250 to $500 a month. Well, we're still keeping it below 100, so it's a great, great offer. And if you talk or work with Pro Trader Strategies, I'm sure they can work in some discounts for you. They're always open and willing to work with you. So that's the beauty of this. We are an educational company. We're not here as a vendor trying to sell you something and say, well, good luck. We don't care once we made the sale. No, we're here with you every step of the way, educating you. We have great tech support. You can always contact me via email to ask me personal questions about trading, and I'd be happy to answer them for you. So we're here to teach you. That's our only goal, not to trade for you, but to teach you how to trade so that you can be in charge of your own trading decisions. So once again, as we close here, this is a great offer. This is 41 years of information I've accumulated, packed in to one simple to use platform, and it's only $7 for 30 days. I really strongly believe, and through experience we've seen that after 30 days, most of our new students and members stay on to use the platform longer because there's so much information that's helped them. So contact Pro Trader Strategies, use the link in the chat box or call them directly. And as we close here, I want to say thank you so much, and be sure to return next week because we're going to take part 2 of our PTS Primo platform step-by-step process. I'm going to go a little bit more advanced and show you what else is offered on the platform so that you can really take your trading to the next level, okay? So thank you so much for attending today. Have a great strategy, and I look forward to all of you becoming students and members of mine at the new PTS Primo charting platform. Thank you so much. We'll see you next time. Bye-bye.